Hello, I'm Juliette Mann. Welcome to Global Business Europe. Our top stories. Wall Street rebounds but remains on track for a losing week. Deadline looming. Can the US and Canada reach a trade deal before Trump's 50% tariffs kick in? A sweet deal. Switzerland and China expand their free trade agreement. And...
So did you hear the one about the city that hosted a whole series of festivals every August?
Lights, laughter, levy. Edinburgh's big festival season comes with a new price tag for tourists. Stocks have recovered slightly after a week of decline driven by rising bond yields. The S&P 500 is up but is still on track to end its three-week winning streak. And the Dow is said to have its worst week since March. Our correspondent Mitch McGann is in New York. Good to see you, Mitch. So, stocks bouncing back a little bit after Thursday's sell-off. Is it enough to turn the week around?
I don't think it will be. Good afternoon from New York, Juliette. Look, the picture is mainly positive if you look at today's market performance, as you mentioned, without looking at the entire week so far. The Dow Jones today is up 0.7%, the S&P 500 is up 0.5%, and the Nasdaq is also up 0.5% on this Friday. Over the week, though, most of the indexes are actually in decline, as you mentioned. The Dow is down 1%, the S&P is down 1.4%, so that's significant, and the Nasdaq is still slightly in the green. So some positive news there for investors in the tech-heavy Nasdaq index. But a couple of things to consider here. Part of the reason we're seeing growth today is the strong gains that have been made by healthcare companies, and one of those is Merck, the pharmaceutical company alongside Moderna, as we reported this week, is responsible for a new melanoma vaccine, and Merck today is up 2.5%, while Moderna is up 12.2%, meaning that company has risen an incredible 200% over the last 6 months. So investors very pleased with its performance. This rebound comes after what has been a difficult week for investors here, as we've just talked about. There's fears of rising inflation driven by higher oil prices and the conflict involving Iran. They've been pushed investors to sell off bonds over concerns that the fixed returns those bonds pay will be eroded by rising inflation. So we're going to be watching in the next couple of days and in the next week whether there are any developments in the conflict over that period, to see whether or not those fears will be alleviated and to see if it will turn things around. But really, the bond market driving that performance this week.
Is all of that driving what's happening in crypto? I'm looking at Bitcoin up 20% on the week. What's driving that surge?
Yeah, this is massive for Bitcoin investors. Many people had written off Bitcoin after a sharp drop earlier in the year. It's now trading at $77,000. It hasn't been above $70,000 since May of this year. What we have seen is that Treasury has been buying back long-term bonds. That's giving investors more money to do with what they want, and it's enabled more investors to buy up Bitcoin. I read one good quote this morning saying that this decision from the Treasury to buy back bonds has, quote, emboldened the Bitcoin bulls. It's also been buoyed by the fact that Donald Trump has been pushing Congress to pass the Clarity Act, which is crucial legislation, or is seen as crucial legislation for the crypto industry, as it would be the first crypto regulatory framework. So a couple of things there really driving the price up of Bitcoin. It's unclear how long that'll go on for, but at the moment investors will be happy after what has been a difficult few months, really, for Bitcoin investors.
Mitch McGann, thanks so much. Mitch McGann in New York. The UK government recorded an unexpected budget deficit last month. Government spending exceeded tax income by $2.5 billion in July. Higher spending driven by inflation outweighed record income tax receipts. Europe's biggest bank, HSBC, spent more than $67 million on severance packages last year as it removed 134 of its most senior employees. They were classified as material risk takers, and they included senior executives and other staff whose decisions could significantly influence the bank's risk profile. It marks the bank's biggest senior banker cull since the 2008 financial crisis. Foreign investment in China's high-tech industries grew by 32% in the first 7 months of the year, reaching more than $27 billion. Now, that accounted for more than 40% of the total, with inflows from Saudi Arabia more than tripling. Investment from France and South Korea also increased. China and Indonesia agreed to strengthen business and investment ties. Chinese Foreign Minister Wang Yi met his Indonesian counterpart, Sugioro, in Jakarta. They also pledged to increase trade while improving market access for Indonesian commodities. The United States and Canada have just hours to agree a trade deal before a 50% tariff on roughly $20 billion worth of Canadian imports to the US takes effect. Trade talks are underway, but a final agreement is yet to be announced. Our correspondent Jagruti Dave is in Washington. Hi there, Jagruti. So, where do the trade talks stand right now?
Well, it depends on who you ask. If you asked President Trump a few days ago, he said they've reached a deal and they just need to finalise some details and sign. But that's not what the Canadians are saying. Canadian officials, they say that they're very close to making a deal and that they continue to make progress. There's no official comments about the details. People are remaining very tight-lipped. But there are clearly some sticking points, according to reports. The US's offer would lower tariffs on Canadian steel and aluminium to 25%, and auto tariffs would drop to 15%. Now, that's still higher than what Canada wants, and reports are saying that Canada is pushing back. So as this deadline inches ever closer, we'll find out whether they accept the deal or not.
Jagruti, if a deal isn't reached, then what?
Well, Canada really does need to decide if they take a deal that they're not exactly hoping for, or do they bear the brunt of 50% tariffs? These are those tariffs announced under Section 338 of the Tariff Act of 1930. This allows the president to impose tariffs based on claims of unfair practices, trade practices. And this is what will happen if no deal is reached by 12:01 Eastern Time on Saturday. These new tariffs would go into effect on about $20 billion worth of Canadian exports. This would affect goods from hockey sticks to wine. And this is affecting around 2% of the total trade between the two North American neighbours, and widespread implications, of course, of that, with businesses already warning that this could damage their sales.
Thanks, Jagruti. Our correspondent, Jagruti Dave, in Washington, D.C. Oman and Iran have been speaking about ways to resume talks on safe navigation through the Strait of Hormuz during a phone call with the two countries' foreign ministers. The key waterway has been largely blocked since the conflict in the Middle East started, pushing up oil prices. Now, the cost of moving oil is also soaring, with some tanker rates now reaching around $550,000 a day. Oil producers are paying huge premiums to secure ships as shipping routes remain disrupted. But how long can these prices last, and who ultimately pays? Stavros Karamparidis is an associate professor of maritime economics at the University of Plymouth. Hi there, Stavros. So what is actually driving buyers to pay these kinds of premiums right now?
Hi, Julie. Thank you very much for hosting me. That's a very good question. You know, it's the lack of oil in the market. As you may remember from the first analysis that we had, oil that comes from the region is 20% of the global oil production. So as you can imagine, there is a kind of a deficit at the moment. If you see the news, US stock, for example, of oil is at the lowest rate. It's less than 300 million barrels. That's a historical low, as far as I remember, of 1985. So as long as there is demand for something, of course, the price will go up. So it's a matter of the equilibrium of demand supply. Very simple for an economist to explain that.
The UAE state oil company, ADNOC, chose to buy its own fleet outright rather than charter. What do you think about that? Is owning your own ships becoming the only way that you can guarantee your oil gets to market?
It's a bit more complicated, you know, because in shipping we are operating in truly global environment. Even if, for example, the ship owner wants to pass from a risky area, right, as at the moment the Strait of Hormuz, then of course it's the crew that has to confess, because you see what is happening around there. Unfortunately, a lot of sailors has been killed since the war in Iran has started, and that's a very sad situation because there's a lot of seafarers in the region that are facing that kind of atrocious events. And of course, it's the crew that has to be willing to pass from that. But even if the crew wants to pass through that region, then it's also the insurance company that has to give the green light. So it's a bit more complicated. Of course, if the vessel is owned from a state company makes the situation a bit more secure. Why I'm saying that? So, for example, if you're saying that the UAE wants to build their own sovereign fleet, then if Iran attacks those vessels, it's going to be kind of a casus belli. And of course, I'm not a maritime lawyer, but it means that this kind of actually is attacking the UAE. And of course, that's going to be a very tricky situation that, it has to be resolved between the two nations. It seems at the moment that that could be kind of a solution going forward. But history has proven that if a company is owning some vessels, doesn't mean that they can manage it better. And that's why, of course, a lot of shipping companies has evolved. And of course, we have to be clear about what we're talking, if it's a state company or it's a private company who owns those assets.
Now, two of the world's most important shipping choke points, the Strait of Hormuz and the Panama Canal, are under pressure at the same time. How much of the cost do you think eventually lands on ordinary consumers?
Based on some calculations that we have done with my team a few years ago, because you may recall that back in 2023 we had the same situation again. El Nino was pushing the Panama Canal. The overall drought has dropped approximately for 3 meters. So again, we had the same restriction of how many vessels can pass on a daily basis. And we had back then the Red Sea crisis that, it was the Houthis that at that time were hitting the vessels. So that's why a lot of vessels were doing the D routes, and they were going to a longer distance. It was 35% longer from Asia to Europe and also America, because a lot of the American markets as well, especially the East Coast, was served through the vessels were passing through the Cape of Good Hope. So all those costs, and we calculate that cost was approximately 20 to 30% higher, because it was 20 to 30% higher the overall distance that the vessels had to cover. So those costs, of course, end up to the final consumer, because when the freight rates goes up, the final consumer has to pay for them.
Stavros Karamanparidis, thank you very much. Trade between Iran and Iraq is also being affected by the conflict. Our correspondent Owen Holdaway reports.
Winding through the Zagros mountain range, about 3.5 hours' drive from Erbil, the capital of Iraqi Kurdistan region, lies Haji Omaran, one of the main border crossings between northern Iraq and Iran. For communities on both sides, this is far more than a border crossing. It is an economic and social lifeline connecting families, businesses and communities across the frontier. But the war in Iran has disrupted that lifeline.
After the war, the transfer between the border decreased so much, but still we have some trade.
Those crossing the border are also offering a glimpse into what life is like on the other side, as people and goods move between the two countries amid the continuing uncertainty.
The border crossing has become less and less, not like before. Iran's currency is very low value because of the inflation, and unless we have guaranteed work here, we cannot afford to come.
Haji Omaran was closed to commercial traffic when the US-Israeli strikes on Iran began on February the 28th. Although the crossing has since been reopened, trade has yet to return to its previous levels.
With the ending of the Memorandum of Understanding on Monday, and with the failure to establish diplomatic talks between Iran and the US, and both militaries remaining on high alert, there is an increasing risk of this border behind me closing again, with severe consequences for both Iran and Iraq.
In the nearby scenic town of Choman, the economic impact has been particularly severe. Local businesses rely heavily on the steady flow of people and goods across the border, meaning any disruption to cross-border movement is felt almost immediately.
Our work became very bar. We cannot do anything because of the sound of drones and missiles. We hope to God that things might get better again.
Because of the sound of the drones, missiles and fighter jets, people do not dare to come out of their houses. There are so many people crying in their houses because of these horrible sounds.
The Trump administration initially said the war with Iran would be over within 4 to 6 weeks. Yet 6 months on, thousands have been killed, and the economic fallout is continuing to ripple far beyond the battlefield. With the conflict still showing no clear signs of ending, communities along this border remain caught in the uncertainty. This is Owen Holdaway reporting from the Iraq-Iran border for CGTN.
This is Global Business Europe. Still ahead. A trade upgrade for China and Switzerland, with Swiss watches, chocolate and pharmaceuticals set to benefit. Could it take their growing relationship to a new level?
Everything is a business story.
Welcome back to Global Business Europe with me, Juliette Mann. The headlines. Wall Street rebounds but remains on track for a losing week. Deadline looming. Can the US and Canada reach a trade deal before Trump's 50% tariffs kick in? China and Switzerland have agreed to strengthen their free trade deal after 2 years of negotiations. The updated deal will remove tariffs on almost all Swiss exports to China and make it easier for Swiss investors to enter the Chinese market. The agreement will be formally signed at a later date. David Hennig is Director of the UK Trade Policy Project at the European Centre for International Political Economy. Great to have you on the programme again, David. So look, this free trade deal has already been in place for over a decade. Why has it taken so long to widen it?
Well, actually, by trade deal standards, this is actually quite swift to upgrade it within 10 years. I actually think both sides will be pretty pleased with this. That China has agreed to some pretty good concessions, I think, with regard to Switzerland, particularly given the mood around in global trade of a lot of protection. So set against that, I think this is a pretty good achievement for both China and Switzerland, and I think they are both pretty pleased with it.
But right now, almost all Chinese goods enter Switzerland tariff-free. But Swiss exporters only get that on about half of their goods going the other way. So is that all being evened out now?
Yes, I think that this is a good deal for the Swiss. So when and it shows the changing global economy. I think when the deal was first done, it did seem like a better deal for China. The Swiss agreed to remove tariffs on most things. They're pretty favourable to free trade, the Swiss, but they didn't get such a good deal in return. So I think it's quite interesting that China has agreed to remove a lot of tariffs on Swiss products now to make it easier for Swiss companies to do business in China. Yeah. Some very real concessions there. The first time also that China has signed up for certain commitments with regard to environment and labour. So it's quite interesting to me that China has made these concessions now, and I think it shows a desire to show that they still want to proceed with existing trade rules.
Yeah. So watches, pharmaceuticals, precision things like Swiss watches, those are the big sellers, those big Swiss sellers into China. Which of those industries do you think are going to feel the benefit of the tweaks to the free trade policy first?
I think the most obvious is going to be pharmaceuticals, although tariffs are quite low. I think the other area is potentially and watches, obviously, but the Swiss have quite a good record in complex engineering products and have certainly exported a certain amount of those to China. So I think that sector, some of which was already tariff-free, but I think that sector will also feel the benefit. But obviously watches is the biggest area of potential benefit here.
Looking at the numbers, Swiss-China trade has grown by nearly 2/3 in the last decade. That's even before this upgrade. So how much further room is there to grow those ties?
It's always a little tricky to deal with trade figures for Switzerland because a lot of it comes down to gold transfers, and that can be kind of taken away. But if I look at them, yes, because the figures have already gone up, I think that this will be more of incremental. I think that the big boost has already come to Swiss-China trade with the signing of the original free trade agreement. I think this won't make such a big difference this time round, but it should serve to at least cement in place the existing trade numbers and perhaps increase them a little bit more. Also, for Swiss companies, this should improve services trade between Switzerland and China, and obviously that's an area where the Swiss will be particularly keen to expand their exports.
David Hennig, thank you very much. As the US and Mexico renegotiate their trade deal, pressures growing over Mexico's economic ties with China. While Washington looks to limit Beijing's reach in Latin America, Chinese automakers are continuing to expand across the region. Our correspondent Frank Contreras reports.
Back in April, when the Guangzhou Automobile Group, known globally as GAC, announced plans to build vehicles in Mexico later this year, it was a major headline in Mexico's massive auto sector. Auto industry experts, the public, and many journalists took it to mean that GAC would build its own factory from scratch somewhere in Mexico. But the company had other plans. A month later, the Mexico City daily El Economista reported that a more likely scenario is that GAC could partner with Honda Motors and possibly install their new assembly lines in Jalisco State. None of this industry intrigue has fazed one Mexican filmmaker who loves high-end vehicles, and now his ride of choice is this 2025 GAC M-Zoom Racer.
No le pide nada a otras marcas, la verdad.
It's just as good as other brands, honestly. In terms of features, performance, and reliability, it hasn't given me any problems so far. As for equipment, compared to other brands, it comes even better equipped, with more driver assistance features.
And despite U.S. efforts to block China from growing in Mexico, sales of Chinese-made vehicles here are still rising, according to the Reuters news agency. On the issue of the Trump administration's pressure to limit China's growth in Mexico, one economist says Mexico must create its own independent trade policy with the Asian giant.
Estados Unidos
The United States is explicitly forbidding Mexico from depending investment-based economic ties with China. If we let that happen, we will be denied the opportunity to learn more from the leaders in electromobility, currently based in that Asian nation.
En el país asiático, ¿no?
Industry experts expect GAC and other Chinese companies to keep a low profile until after the U.S. midterm elections and hope that opens new opportunities for growth in Mexico and the rest of Latin America. Frank Contreras, CGTN, Mexico City.
The Edinburgh Festival is in full swing. Throughout August, the Scottish capital plays host to around 2 million visitors flocking to the city to enjoy theatre, comedy, music and films. But this year, a controversial new tourism tax is also in play. Our correspondent Jeff Moody explains.
Edinburgh in August, awash with performers. A city bloated with artists, producers, promoters and tourists. Nearly every street a show. Nearly every building a venue, from high art to backroom stand-up comedy.
So did you hear the one about the city that hosted a whole series of festivals every August? They generated almost $700 million for the local economy.
Performers can gain exposure from a stint at the festival, although very few make money. But the city does.
The collected Edinburgh festivals were second really only to the Olympics and the Football World Cup as a ticketed event. We happen every year in this city. The Olympics and the World Cup happen every 4 years and never in a city the size of Edinburgh. So it really is a significant cultural undertaking each and every year in August.
And brings in a huge financial gain to the city as well.
Absolutely.
And that financial gain is set to rise because a new tourism tax has come into force and it's proven controversial.
The idea behind this tourism tax is that visitors pay an extra 5% on top of their accommodation costs, and that money goes into supporting the city itself.
The revenues from that will do two things. One is to benefit the infrastructure of the city to support the very high visitor numbers, and secondly, also to support arts and culture, which are the driving force behind a large part of that visitor number.
It's thought the tax will raise an additional $10 million in August alone. But there's a problem. The city has just 14,000 hotel beds, so prices shoot up. $500 a night, $1,000 or more. The rules of supply and demand at their most brutal. For private accommodation providers, inflated prices see them through the lean months, but for cash-strapped performers, an additional levy is the final straw.
In 2024, it was particularly bad on the accommodation front, so we spent the whole month on this caravan site. We're getting an hour bus in and an hour bus out every day, so 2-hour round trip to get in and out of Edinburgh. I know some other people stay in Glasgow now because they can't really afford it here, so it is still a problem.
This is the first year of the new tourism tax. When the visitors go home and the streets return to normal, the analysis will begin. Will the benefits outweigh the concerns? Will visitors keep coming back? Or are the festivals pricing themselves out of the market? Jeff Moody, CGTN, Edinburgh.
The headlines. Wall Street rebounds but remains on track for a losing week. Deadline looming. Can the US and Canada reach a trade deal before Trump's 50% tariffs kick in? And that is it for Global Business Spirit. Thanks for watching. There's more on all of our stories at europe.cgtn.com, and do follow CGTN Europe on Facebook and Instagram and TikTok. And you can go to CGTN Europe's channel on the Telegram app or scan the QR code you can see there on the screen and get stories and updates sent direct to your phone. Coming up next on CGTN Africa Live. We'll see you again tomorrow, same time, same place. From all the team here in London, goodbye.